Okay, you guys, we're now going to take a look at exercise 8-6 on page 459. We're dealing with KWOC Company. It says KWOC Company's inventory balance on December 31, 2016 was $165,000. That's based on a physical inventory count before considering the following 5 transactions. So they want us to read through these 5 transactions and see if any of those 5 need to be picked up in our inventory, in KWOC's inventory balance. So their inventory balance before the additional transactions was $165,000. Okay, now what you're going to need to be familiar with here is something we discussed in financial accounting, but it's your terms FOB destination and FOB shipping point. Remember, if it's FOB destination, then the goods belong to the seller until they reach their destination. If it's FOB shipping point, then the goods belong to the buyer as soon as they're shipped. So we need to read through each of these and see if there are any of them that KWOC needs to pick up in their inventory. And add to the $165,000, or possibly deduct from. Okay, they say the required, it says determine the correct inventory amount to be reported in KWOC's 2016 balance sheet. So let's start with number 1. Goods shipped to KWOC FOB destination, which means they will belong to KWOC when KWOC receives them. They were shipped on December 20th. They weren't received, though, until January 4th. If they weren't received till January 4th, then they still belong to the seller on December 31st. KWOC does not need to pick those items up in their ending inventory. I hope that makes sense. If it's a destination contract, then those goods still belong to whoever the seller was until they reach their destination. They did not reach KWOC's place of business until January 4th, so KWOC would not need to pick those items up in inventory and could not. Okay, number 2. Goods shipped to KWOC FOB shipping point. Okay, if it's shipping point, then they belong to the buyer, in this case KWOC, as soon as they're shipped. They were shipped on December 28th. So KWOC would need to pick those up in inventory. So goods shipped FOB shipping point on December 28th. Yeah, we're going to need to pick those up. 17,000. Okay. Hope that makes sense. They belong to KWOC as soon as they were shipped because it was an FOB shipping point contract and they were shipped before year end. So KWOC has to pick up those goods in their inventory. Okay, let's go to number 3. Goods shipped from KWOC to a customer FOB destination. Okay, those, if it's FOB destination, they belong to the seller, in this case KWOC, until the goods reach their destination. They were sent on December 27th, weren't received by the customer till January 3rd. Yes, those items still belong to KWOC at the end of the year. They cost $22,000. So goods sold by KWOC FOB destination, not received till January 3rd. Okay, goods sold FOB destination, not received until 1/3 So those still belong to KWOC. They belong to the seller in transit until they reach their destination. They didn't reach their destination until the new year. So KWOC's got to pick those up at cost, $22,000. Our number 4, goods shipped from KWOC to a customer FOB destination. Okay, they still belong to KWOC, the seller in transit. They were shipped on December 26th. Received by the customer December 30th. So on December 30th, title passed to the customer. No need for KWOC to pick up those items in inventory. Our number 5, goods shipped from KWOC to a customer FOB shipping point on December 28th. Well, if it's shipping point, they belong to the buyer as soon as they're shipped. So they belong to the buyer there on December 28th. We don't need to pick those up either. So what we want to do is sum this amount. So the $204,000 would be KWOC's correct inventory balance on 12/31/16. There you go, you guys. Be careful with those. To get that one right, you really have to understand the FOB shipping point and FOB destination. Think about who's the buyer, who's the seller in each one. And you shouldn't have any trouble with exercise 8.6 on the Connect Plus site. Thanks a lot.